30.
Good morning, George.
Good morning, Sophie and everyone else. Hope everybody's doing well today.
Doing well today. It's a gorgeous summer day, and the only thing we're missing is you here. Virtual reality is wonderful, but or virtual meeting attendance is wonderful, except we don't get to see you as much.
Yeah, well, you know, I miss you too.
So we have a little bit less than 30 minutes today to run through a few things. I gave everybody an agenda. Anything that folks want to add or subtract from the agenda? Subtract. Looks good. Okay. So I wanted the bookkeeper sent financials late last night that I have not had a chance to review. So I really didn't want to send them along today for discussion. I will send them to the board after Mike and I have a chance to review them.
Yeah.
So what we do have is Mike's budget to actual that he's reconciled that shows our expenses month to month. Right now, if you'll notice, we are 63% expended, but I think Mike wants to talk to you a little bit about why.
I can, so I'd like to start, if that's okay, with revenue. Just to give you some things to plan on. So an additional 160,000 will come in from lease payments and management services this fiscal year. That 160,000 is that could be deducted from line code 450. So we will not have to get the whole 296,000 from use of fund balance. The first lease invoice went out and it starts as of July 1st. When all the dust settles, meaning final utilities and waste payments for MWS are made, we will have just over 700K in the contingency checking account left over from the sale. And we're also still expecting a payment of 1.4 million in change still to come from the sale. So now when we go down to expenses, everything is pretty much in line with expenses on the budget. We have a few ledger code lines over 50%, but those costs have been paid ahead. The big ticket here is the second to last line item, ledger code 7501, expenses to cure CRM for the shutdown. We didn't plan on carrying the plant this long. We plan on closing sooner. The closing costs were much higher than we expected, but also ledger code 7501 is 100% expense recorded under the MWS ledger and is a MRC reimbursement. I recommend at this time we leave everything as is for now, but in third quarter, when we usually revise the budget, the board can opt to fund the 100K here from the proceedings in the contingency account, only if necessary. We will need an internal transfer from the contingency checking account to the operations checking account to cover this month's payables, but I don't expect we'll have to use any more funds from the wealth management accounts this year.
Questions about our current budget to actual?
Laura, just some information. When we purchased the plant back in August of last year, we carried it on the MRC joint venture balance sheet as an investment.
I don't know the answer to that, but George may.
Yes, that's
Okay.
correct.
Did we at that time create a balance sheet for MWS?
No.
At least a capital account with money put in?
We tracked the expenses separately, but we didn't actually create a separate bank account. So I think, you know, and so on the quarterly balance sheets, that's one reason I did it this year as well. I've been tracking what was basically, I assume that everything in advance of operations is capitalized. So the capital number on the balance sheet that I produced, the consolidated, shows a specific number for advances to MWS. And that's how we track them.
I know we kept track of every single transaction. I have no,
So what you're asking for, Bob, is a separate balance sheet. We have not done that yet. The
Right.
first exercise was for Mike to go through and code everything. Now, I need to talk with Karen about whether or not we can do how singular we need to be in creating that balance sheet, because we need to show what went in and that we came back down to a limited share
right,
by the end of the year.
yeah,
I want to talk with Karen about how
Okay.
granular that needs to be.
okay. I'd have thought our new partners would have wanted to see what the financial position of the entity they were buying into, that's all.
Yes, yeah, no, we've shown them expenses, so they have seen them.
Yeah.
And we've explained it to them. There were a couple of things out also on the balance sheet that we weren't in a hurry to make public in terms of, for example, the accrued liability to waste management, which if we were going to do a separate balance sheet for MWS would have had to be spelled out, but if we consolidated into MRC, then it wasn't as necessary. We could show a consolidated number rather than an individual number. As of June 30th, that number goes away. It's now an MWS number, 90%, and it's going to get paid by our partner rather than by the MRC. So I think that changes its status by showing it as an MRC consolidated number. I think we avoided putting out their numbers that might have complicated some of the negotiations with waste management, very frankly. And now those numbers are cleaned up and done, because as of June 30th, they're MWS numbers, not MRC.
So George, your sound really garbled to me.
It's really difficult.
You're muffled,
Danny,
George.
Uh-oh.
And we think it's, when you through the mic though, it's a lot better, but we're pretty sure it's on your end because Tony's fairly clear.
Okay, is this better?
Much.
Okay, well, then I will do this going forward.
Use cash flow for all the waste being invoiced, all the waste payments coming
Right.
in, and then expenses for the facility only. The expenses I have on our ledger, of course, I would have our legal and our consulting and engineering on some cases where was shared with them at the time of the sale, because I record utilities and those type of things
Yep.
on a separate spreadsheet. But in that spreadsheet, I sent you everything.
No, I could see that. It's
So-
detailed and meticulous.
So what we want to do is take that and George's information. You are right. We need to record the investment, the sale, and our position at year end.
Do we hand those books over to the new 90% owner? I mean, are they going to work off of those books, or are they going to create ledgers of their
They're
own?
gonna create ledgers of their own.
They were provided with a spreadsheet that showed utility costs month by month.
Okay.
And cash flow of waste
So-
invoicing.
We're back to kind of the way it was when we had PERC.
Yeah.
And we didn't track we didn't share books. We had our own joint venture. The MRC books and then
Yeah, I
The
realize
venture.
we want the venture to have their own set of books,
yep,
no question. But have they accepted the idea that MWS owes MRC some money? We've advanced money to MWS.
Right.
Yes, God knows, utilities and everything,
so when we sold, that wiped
wiped it out.
it out.
Okay,
MWS was owned by MRC.
at that time it
MRC
was.
funded it,
Right.
yes. So I will, after speaking with Sophie, my intentions are, because I probably have a couple of stragglers, not much. I think I probably have another, we just signed the utilities, but I will close what I call, I'm not an accountant. I will close our end of MWS after June 30th. There might be some straggles in July. We shouldn't have another MWS recorded. After that, it's all on
It's all on
them.
them.
We've sold the company. They have 90%. They will start controlling the expenses and the cash flow for the company. We will invoice them for the management fee and we'll invoice them for lease, but that will all be invoiced under MRC.
Sorry.
No,
Another question.
just keep
I know we
going.
don't have a lot of time. Back in February of 2020, I think it was, we advanced $1.5 million to Coastal.
Yeah,
I'm assuming that that's been written off.
I have it on this.
Still have it.
I have it on.
so
this.
in our books, in that George has, we've written it off.
Yeah,
So,
right.
well, Mike is tracking for the purposes of calculating how to ensure that MRC is made whole.
Yep.
Understand that's what, when Mike does this about his books, that's his Excel spreadsheet that he keeps to try to make sure that the deals he makes will ultimately make our members whole.
Got it.
George and the auditor wrote off the $1.5 million debt, understanding that we have not foreclosed our ability to go back out after Coastal if we had some reason to believe that, or fiber right, but
We bought the asset. We didn't buy the liabilities.
Yep.
Except the ones that were.
Yep.
And have been taken care of.
Yep.
Okay.
that, so we should rejoice
Yep.
in the fact that when we went to buy the asset, Mike, George, our attorneys went out and negotiated with all of the lien holders to make them get to a place that they agreed was fair. And we have paid everybody through small payments made until the sale and then the big balloon payments to some at the sale.
Yep.
And that includes the town of Hamden, waste management. I mean, there were some really big bills in there that we have made our partners whole, which I think is important to the municipal reputation.
Yep, I agree. Thank you. Thanks for that clarification.
Good? All right. So the next page that we're looking at was, this is simply the table from Mike's 3-page tabloid print, item by item, what the cash flow was and what the cash burn was related to municipal waste solutions and or / CRM, because it went back to before that. And if you'll see, what he is looking to try to make up over time with the deals that we've made thus far is $6,106,596.47. I think it's really good that he tracks those cents.
Yeah.
That's critical. So that gives us a sense of kind of what the goal is here over the next 15 years.
That includes your 1.5.
Right.
So we've got that. George did the asset management letter that I know we're gonna talk about during the board meeting. I just didn't know if people had specific questions that you'd want to get more into detail with George before we moved on. This shows our cash, both our total assets and our cash position. I think that it would be helpful, Mike, could you talk just a little bit about where we are with the contingency account?
Yeah, so I'll do my best to explain it. So the way that it works is we have a swap. So whatever we put into Juniper Ridge for waste, Juniper Ridge owes it to Crossroads. Okay, but they get behind and have to make up on it. So when we closed, there was a liability of swap waste we've already billed for and collected the revenue for that's sitting in the contingency account, but it's not crossed the scale yet at Crossroads because Juniper Ridge has to make up that waste. That number was around $706,000. Okay. We currently have, when I finish this round of deposits and all our billings done, we're gonna have about 1.2 million in a contingency account. When we finish paying our last waste bill and the final utilities, it's gonna be just a little over 300,000. So we're gonna end up with between 750 and 800,000 in the contingency account. That would be the same number almost that was the liability that was kept at closing for the swap waste. Okay, so at the end of the day, George and I have talked about it. We're not gonna need to take anything out of the wealth management account to fund the budget with that in the contingency account. And we feel we should just leave it there for right now till all the dust settles. We can revisit it in third quarter. You know, it's probably gonna be around 500,000 when we get there because we do. Normally, we take another couple hundred, we're gonna have to take another couple $100,000 for the operation budget this year. That's all scheduled and budgeted and planned for, but there's no reason to take it out of the wealth management account. Wealth management account, I believe, is around 1.2, 1.3. We should just leave it there for now, let this sit in the contingency account. Maybe talk about a third quarter in the year again. I'm assuming there'll be $500,000-600,000 there when that happens. Is that the explanation you were looking for?
That is.
Is there any reason to hold on to the cash collateral account? I mean, that was an inheritance from CRM, and it was there for a reason. The reason's gone away.
So
Why don't we close that and consolidate?
We have 3 accounts. And one is operating, one is cash collateral. And oh, I'm sorry, you're talking about the.
he's
wealth
talking about
management,
investment, and I see what you're saying. So you'd like to take and take the tip fee stabilization account and cash collateral account and just make them MRC invested.
Yeah,
George, in the way you account for things, is there a reason why we wouldn't want to do that?
No, at this point, they can be consolidated. I think there are 2 investment accounts. It's mostly history, and we did want to get to the end of the negotiations to make sure there was no need for an additional collateral, a separate account, in which case we'd move it and then have to move it back. That's eventually where we ended up. When we signed the master waste supply agreement amended and restated, all the references to the cash collateral account were deleted, dropped from the agreement. So now we're at a point we've got signed agreements. In my view, there's no reason not to consolidate at this point.
George, it's still hard to hear you. I'm sorry.
Okay, I can call in if that would be better.
Just have that top act going today for some reason.
One never knows, does one? Okay, I'll call in, but just to be clear, in my view, there's no reason not to consolidate the cash collateral and the fee stabilization.
Okay, hey, Tony,
Yes, what will that account be called? The consolidated account?
We can keep it as the tip fee stabilization account, just merge the cash collateral account into it.
is tip fee stabilization spoken to in other agreements so that we really need to keep it? Or could we just have it be MRC invested funds?
I believe we could just call it MRC investment fund. I'm trying to think if there were references in the joinder agreement, but I don't know if they were by name.
Okay, so I saw Jonathan Pottle be bopping around here. I'll ask him that question at some point. Does anybody have any objection to bringing that to the board as a recommendation? If we talk with, Jonathan could tell us that it's a bad idea, and I would want to defer to him.
So the recommendation to consolidate and rename.
Okay,
I think you have to, I'm sorry, I think you have to consolidate because renaming is a big issue for some reason because it still has the former owner's, the Colson's name on it because they just couldn't do it without cashing it out or something.
Yeah.
So
So I just had a question, Sophie.
Yeah.
So the bottom line is that we don't have to do any transfer. Is that the idea?
we shouldn't have to.
I like that.
No. We haven't had to withdraw from that account for some time now, so.
Yeah.
I got nervous when it got to $1 million. So.
So, we have the, invested funds, little one pager that they gave us that shows 1.2 million in invested funds between the total, between the two, 1.3 million between the two accounts. Again, most of them, we've reduced the cash allocation, but they're in bond funds. To help some board members, we also called and got the breakdown of actual funds for people to see. Would you like me to see if we could have our investors, investment advisors come to the next meeting now that we know what we've hit the transition, we know what we have, we kind of have a sense of where we're headed. Perhaps we should now think about what our long-term investment strategy should be with this amount of money and some coming in.
That's a good idea.
You like that? I like that idea.
I
Yeah,
like to call it Stop the Bleeding.
So that means if we're gonna do that, our next meeting needs to be at 9 a.m. Because we need more time for that conversation. But Mike and I will make that happen. And the last item on our agenda is bills payable. So on the back of your packet on page 19, there is a list of the June/July, depending on how you look at it, payables. Most of them are right in line with what we're used to seeing. You'll notice that Commonwealth Resource Management and Eaton Peabody are higher than we've seen in previous quarters, but 80% of those expenses are related to the closing of the facility. So we're paying the bill, but that you saw that on that $154,000.
And both of those reflect services all the way through June 30th.
Yeah, so that should be the way I was pushed hard to get as much of the closing done. I'm pretty sure that's everything. And Eaton and Peabody, I will let you know, I just didn't see the reason is offered to spread it out if we wanted through the remainder of the year. I didn't see a reason why to do that.
Yeah.
So you're right.
But thank you, Eaton Peabody. And you will notice that there is travel and office expense for Mike in here. He provides me with details on those expenditures. The one thing I do want to just bring to your attention is that Mike has been doing without some pretty basic office equipment. I am going to suggest that even if it is a minor overrun of his budget line, he needs a new edition of Excel, and he needs a scanner and just some basic stuff.
We did two budgets, remember, one for a partnership and one to standalone. We're not ready for that partnership budget, but office equipment on the partnership budget was because we're going to be doing this management fee was 5,000 and standalone was 1,500, assuming we were going to continue doing what we're doing. But we do need to upgrade a few things, and I just don't think the 1,500 is going to cover it.
It makes sense to me.
We
It's like
can,
a no-brainer.
Are we okay with recommending the payables?
so the number we're going to recommend is 103,708.
No, 103,809.33, because I need the
Plus the
approval.
$100.91. 103,809. Yep.
So thus far, when we get to the board meeting, we're gonna suggest that we consolidate the investment accounts and rename them if we can. If we can't, we would put it under tip fee stabilization. We are going to invite the first advisors and suggest that we start the meeting at 9 next time. And we're gonna recommend the bills payable. Anything else? Did we really run a on-time meeting?
Excellent. We've been going for a little break.
Thank you.
Good stuff, Sophie.
When Mike comes to my office in advance,